money cause you stress? When a new life situation arises, do you worry how that will affect your budget and cash flow? Managing money is not always easy, but learning how to plan, set, and adjust goals as needed can help keep stress to a minimum and your financial success on a steady course. Welcome to Money Counts, Unleashing Your Money's Hidden Potential, with host Debbie Peterson. Your future plan starts right here. Here's Debbie.
Hello, this is Debbie Peterson at Money Counts. I'm here with Nicole Maloney, my partner, and our show is called Unleashing Your Money's Hidden Potential. And this will be the last show in this series. So there's 13 episodes that can be found either on the Voice America website or on our website, www.moneycounts.biz. And we're going to do a review of kind of the things that we covered and go back a little bit to where we started and what the purpose of this show is, and also what the purpose of our company is, just to refresh your memory and let you know that even though we're not going to be on this radio channel for the next little while at least, that we still are a valuable resource for you, and we would be happy to answer questions or work out a plan for you, whatever would help you out. And the way to get in touch with us is mcradio@moneycounts.biz, or check out our website and you'll find our bios and contact information listed there. And it's been a very interesting number of episodes. And let me go back to when I first talked about why we were doing the show, is because I have felt that people are not trained about things they should learn about regarding their personal finances. There's not training in most high schools on financial literacy or even grammar schools. And then as we get older and we go off to college and we may be spending a lot of money on a very professional career, a doctor or a lawyer or something like that, we still don't get any training about our own money. Or for those types of people who are in those professions, they get very little training about how to run a business. But most of them will at some point in their life be running a business or a partner in a business, that they should understand some of that basic information. So I thought if we could create a company that could help people learn more about their choices, that would be helpful to most of us. And we wanted to include everything that your money touches, not just looking at what investments or what insurances you have. So there's a wide variety of topics, and we haven't gotten into very much detail on all of those things. We've really been presenting what are the major areas where you spend your money, and what are some of the things that you might want to learn more about, and just some high-level conversations around some of the things that we typically find might be helpful. So we still are looking for questions that might be worthwhile to cover. We may well be doing webinar series next year, and you can check that out on our website. And we will be broadcasting that also on our Facebook page and some of the other areas where you can find us. We're also on LinkedIn. And we are a woman-owned financial planning company that is now 15 years old. We're located in Charlotte, North Carolina, and we do business in 15 or more states. I'm not quite sure as of this moment, because every year we get to renew all of our licenses and I have to go back and count them. And our intention is to be able to help anybody who is a U.S. resident or follows U.S. tax laws. It's a little complicated to help people who are not filing U.S. taxes, because a lot of the decisions we make are actually based on what the tax implications are, where we put our money and when we take it out, and what the government requires for those sorts of things. And so if you're interested in having any meetings with us or learning more about our process, there is no charge for you to speak with one of us, and we would welcome any contact from you to see if there's something we can help with. So we started out the series back in October looking at what we call our treasure hunt, which is finding your money's hidden potential, where are areas that we can look at that might be most beneficial to you. And a lot of our money goes in chunks for different things. So some of those things are you need a place to live, so that's expensive. You need a car, that's expensive. We have to pay taxes. A lot of times we may be borrowing money to either buy a car, or we need extra money for things that we need, and we might be using credit cards. So that sort of thing comes into play. Then if we're not good at managing the interest being charged to us, then we may be having cash flow problems for quite a while thereafter until we get that under control. Insurances take a lot of money out of our hands and put it into the hands of the insurance company, and that's so that we can be protected in the event that something happens that's too expensive for us to pay for on our own. And so as we go back through what we covered in the different shows, I hope some of this will refresh your memory. And if you haven't listened to the shows yet, feel free to go back and pick the topics that may be of most interest to you. So other things about our company, I think, that make us a little bit unique is that we are all women working here. And so we did one show that was called Women, Money, and Power, and we learned that women think very differently about money than men do. Women are much more anxious about security and things like that. They're not as big risk takers for the most part, so they like to have investments that may return less but are more predictable in how they might behave in a variety of situations. And so if you come and work with us, you will find that that is also a lot of how we think, that we want to be protective about what you're able to accumulate. We know it's hard to put away a lot of money when you have day-to-day living expenses. And if you're raising a family, or if you're single and you're the only one contributing to your livelihood and your situation, that's also very difficult to manage. So we want to be partners with you or your family or anyone who's helping you make decisions, so that maybe we can find some things that could be made a little bit more efficient. And if we do, that frees up some money for you to use in other ways or helps you stay out of debt. We like to help families and also, as I mentioned, single people. We have a number of people that are in the baby boomers stage where they are retiring, close to retirement. And some of them, unfortunately, have either become divorced or widowed, and they have to rethink what their life is going to look like after one of those major transitions. So if you are a person who is in a transition period where you may be moving or going to college or getting a new job, getting married, having a baby, buying a house, all those kinds of things, there's a lot of disruption to the way your cash flow has been up until the point that you got into that transition period. And one of the things we specialize in is helping you understand what money to use and how much is a reasonable amount to be spending when maybe your income's a little less than you expected it to be, or in the case that you went back to school, you're not able to work or you're working part-time, things like that. So those are the sorts of decisions that we can help you understand and plan around. We believe that there are 5 different stages of wealth knowledge that everybody should be exposed to, and that there's not real help in several areas. So the first thing is, how do you build wealth, or how do you improve your situation from where you started? And we call that your wealth foundation or your knowledge foundation. Planning 101, which is, what are the basic things that you need to be thinking about, and when do you need to think about them? It's better to think about them usually before they happen versus after they've already happened. And what are some of those basic things? We feel that there's not a lot of competition out there for those types of services where we can help you learn that sort of thing, which is one of the reasons we created this radio series, was so if you found it interesting, you could share it with someone else and they could learn some things that might be helpful to them. There's not a lot of major companies that are out there trying to promote education and financial literacy. It would be great if you have any influence in the school systems in your area to kind of put a bug in their ear about getting a little bit more focus on that. I think it would be really helpful. Then the second area that we also feel that is neglected is wealth creation. So once you've started earning money, or you're getting money from somewhere, maybe from someone else, or from investments you inherited or whatever, but you have dollars to do something with, and you have to decide which dollars go for what purpose. If you never start saving, it's very difficult to create any new wealth. You're going to be more on a day-to-day type of a budget, and that's probably going to be stressful for you because it's hard to have something unexpected happen and not have money in the bank to pay for it. So that we consider to be wealth creation. What can you do to create some wealth that you didn't have with the money that's coming in without sacrificing too much of your lifestyle for your family? So we try to help you balance that out. And again, we don't feel there's a lot of companies that are competing with us in that area. The next would be wealth protection, or protection in general, and this is where you see insurances and things like that come into play. And as we've done, we've talked about several different kinds of insurances in the shows that we had. We've had life insurance just recently, 2 shows on that, focusing on different strategies that you can use and different types of life insurance. Our guest for that was Christopher Essex. We also have covered healthcare insurance with Billy Jordan and Medicare insurance with Joshua David. We've talked about Social Security, which is really insurance for your income that's offered by the government. And we had a guest speaker for that, Bill Stark. So we've been trying to show you why you need protection, or if you need protection, and what it can do for you, and when it makes the most sense to be looking at that and having someone help you make those choices.
And also some of the strategies around what you can do from a financial perspective and why you would want that type of protection, or how you can use it in your retirement years and help you plan for that.
Yes, there's several products in the insurance arena that can be used to fill multiple goals. And that's always a benefit, I believe, because you can take $1 and have it work 3 or 4 ways instead of having to have $4 to solve those 4 problems. So there is a lot of competition in that area. There's lots of people who would like to sell you insurance of all different types. Sometimes you may not even need what they decided to sell you, but so it's better to think about that first. And then if you can go to somebody who can help you understand at your stage in life what the most critical needs are and make sure those are taken care of first, and then move on to the other things that are either nice to have or a little more costly that you may not have the cash flow for when your kids are little or you're sending them to college, but you do want to get it in place for later years of your life. So that is a big area that is very misunderstood. And I think from my perspective, whenever you think about making a claim on insurance, you're always waiting for the gotcha where they say, okay, now I'm going to record you and I'm going to tell you why your policy does not cover what you thought it did. So being an informed consumer is really beneficial to you if you can see why there's different prices and costs for something that might sound the same to you on the surface. But when you dig into it a little bit, you'll find that one may be substantially better and well worth the extra money that's being charged. The next area that we'd all like to get involved in is wealth management, which means Now you've got money. Now people want to talk to you about what all these other things we just mentioned, and they can't wait to, get their hands on your money so they can make some money off of it too. And this is where you see the really big investment companies and a lot of the insurance companies offering products and advertising and all those kinds of things, because they can package things up for you in a way that can be very beneficial to you and was going to take some of the stress out of making those decisions yourself, but of course they charge you for that. So you want to make sure that your needs match up with what the programs are that you're looking at. And I believe if you go to a company that only sells its own products, that it's difficult for the person who's trying to help you to give you all the best options that are available, because they're not trained in those, and the company that pays them wants them to sell that company's products. So we've chosen to be independent, which means we can work with many, many different vendors and providers of insurance products, and our broker-dealer, Summit Brokerage, supervises us in the way that we present those products to you and the way we assess your situation before we make recommendations to make sure that we're doing what's suitable for you. And I believe that's very important because there's a lot of detail in all the different products and programs that are available. And we want to make sure that we really understand how they're going to work for your situation, and so does our broker-dealer. So that's a benefit to you if you're working with someone who's independent.
Another differentiation, I guess, for us also under wealth management, this is where you typically see a lot of competition as well. And you'll see in some cases, people will say that they want an assets under management. You have to have a minimum balance. We're not looking for a minimum balance. We're looking to take someone from ground zero and build them up through all of these stages. Now, don't get me wrong, we'll be glad to take someone who has wealth accumulation and has some wealth, and we'll help them, guide them through that. But that's something that's very unique for Money Counts, is that we're looking to help the everyday person and help them grow their savings and eventually, their wealth accumulation.
Right. We feel very good when you're successful, and the more successful you are, the more helpful it is to us. And also it gives you the opportunity to talk to other prospective clients, and we do want to grow our business and continue to help people. So if you're interested, or if you have friends you think might be need these kind of services, we would be very happy to talk with them. And the last major area we're going to talk about will be right after the break, and that's wealth distribution, which is how do you pay yourself when you're in retirement or you're not working and your asset base is fixed, and you want to make sure that it covers everything you need, and that you still have money left over for other things to make your life more enjoyable. This will be our last session on this station, but you can get more materials and learn more about us and other programs we may offer at our website, www.moneycounts.biz. And we've been covering the different stages of financial situations that we feel that you need education on. And the last major area is what we call wealth distribution. And this is not just something that happens at the end of your life in your estate being left to someone, or not just in your retirement when you're trying to no longer work and live off your assets. This happens the first time you get $1, because you can decide, is it a today dollar, I can spend it right away, or a tomorrow dollar, or some combination of those things. So every time we have money come through our cash flow, we have choices that we can make, and a lot of times we don't think about that. You just think, well, I have this much money in the bank, so I guess it's okay to go do such and such, but you might not be thinking that a month from now you had something else that was a higher priority, and if you spend the money now, you may not have enough when you get to the next goal that you were trying to reach. So we try to help you plan for those sorts of things. And Nicole had mentioned to me that she thought it was important that we talk about assets in general. If if you've saved a considerable amount of money or you've got investments in your retirement plans, things like that, when it becomes time to access that money for you to live off of, for whatever reason, whether it's retirement or you lost your job or whatever, it could be a good reason, could be not, you want to think about the earning potential that those assets have. And there used to be that you would try to build a great big nest egg and then live off the interest. That was very commonplace, and that was what most people strived for when they were going to be retired, was to have their house paid off so we didn't have that big expense, and then have enough money somewhere that it would generate earnings that you could live off of, but that the money itself would still be available. That was much easier to do 30 or 40 years ago, yes, back when I was first in this business. And interest rates were double digit, pretty high double digits for a while. And even now, for most of the products that we have available to us, if somebody can tell you that you're going to get 5 or 6% that you can spend, and your principal or your own money would not need to be touched, most people would be very happy with that, because what they've learned is, with interest rates so low right now, the way to get higher returns is to take more risk, and that's very uncomfortable. So all of that is part of wealth distribution. How do you pay yourself? And we really are distributing to ourselves while we're working also. We decide how much are we going to save, if any, or could we afford to save, and how much do we want to use right now.
Right.
So keeping a good balance on that, I think, is important. And Nicole, you know that I'm all for finding some money to do some fun things with. I don't think we should be, scrooging it away somewhere where nobody can use it in case something bad happens. We want to have a good perspective and flexibility. Sorry, I almost knocked something over. And flexibility about how we use our money. We don't want to put it in too many little pigeonholes where it can only be used for one purpose.
Right. Pay yourself back.
We also talked about, so that's the stages of wealth, and those are important, and you may have more or less background in any one of those, but we think that they're all important. Some of the other topics that we covered in the previous shows, we talked about, if you have extra money, how do you decide where it should go? And that's a hard question without some background about who you are and what's important to you. There's not an obvious answer. So if you don't know where to put it, it doesn't mean that everybody else knows the answer and you don't. It's really about your own personal priorities and what's important to you. So that's part of planning, is saying, well, I'd rather reach this goal than that one, so I'm going to direct more attention and more resources toward that particular goal. We also talk about sometimes that people complain that, oh, my car broke down or my furnace isn't working and I have all these expenses. And I like to say that they may be unplanned, but they're not unexpected. Those things are going to happen to us. Nobody gets through life without times when they need money they hadn't known they would need. You can't plan for everything, but you should know that these things will happen. So that's what emergency funds and things like that are for. And there's a number of ways that you can use different resources as emergency funds. It does not necessarily mean that you have to have money that's sitting in a savings account. It could be you have a 401k you could borrow against. It could be that you have equity in your home and you have a line available.
Be simply a low-interest credit card.
Could be a low-interest credit card. All of those can be resources, and depending on the need, sometimes we don't have a lot of choice about where we get the money from. So we like to keep as many options open as we can. We did some talk about retirement and the difference between IRAs and 401ks and why you might want to choose one over the other if you have a former employer or if you're working for yourself. There's a variety of different ways that you can look at funding retirement. And we also talked about the rules that go with retirement accounts, which are very strict. So that is, even though you get some good tax breaks and some tax deferral on some types of retirement accounts, or you can get tax-free distributions on things like Roths, you also have to be careful to be in compliance with the rules because the penalties are very strict. So it may not be the first place to put your money. You should have some money outside of those kinds of accounts that you can use so that when something unexpected happens or unplanned happens, you don't have to liquidate an investment that has penalties associated with it. We did a couple of shows with Stacy Kimmery on mortgages and different types of mortgages, and also credit, how to manage your credit score and how various types of loans impact that. And I'm hoping that that was helpful for you. We feel that that's an area that we get a lot of questions in about. We talked about buying versus renting. And to me, that's as much a lifestyle situation as it is a wealth creation idea, because if you're traveling all the time and you're not sure that you're going to stay in one location a long time because, millennials in particular like to experience a lot of different things and may not want to commit to one location for a long period of time, it may cost you more to buy a house than it would cost you to rent. And you have more freedom and less outflow sometimes with renting because you don't have to do the upkeep and things like that. So we felt that was an important area for us to talk over with the audience. We talked about taxes and how you manage those. We know there's a new tax bill that's just coming out, and we will be doing some educational sessions on that, but not on this radio station, at least as of now. They will probably be more in the format of webinars. But this tax bill will impact everybody who earns income, I believe, in the United States, because they've changed the brackets, they've changed the exemptions, they've changed the deductions. So things are going to be shifting, and you're going to want to know as quickly as you can how you're going to be impacted. And they've made it, or their plan is, if it's not quite finalized, it to be effective on January 1st.
Yes.
So that does not give the people who record all of the transactions we do that may have the tax consequences changing much time to get the rules into their software programs and things like that. So be a little bit careful if you're trying to do projections on some sort of tax software. Make sure it's been updated for the new rules before you spend a lot of time doing that, or you could get some really misleading information, I think.
Yes, and when in doubt, if you do work with a CPA, try to reach out to them before the year end just to see your personal tax situation, if there are any changes that you need to be considering. They'll be working furiously, I'm sure, right now, trying to digest the tax bill and the changes and how it will affect their clients.
We talked a little bit about things that impact your family. So one of the areas that we get a lot of questions on is college planning and college funding. And a lot of people are familiar with, they're 529 plans, but people call them all different things, which are investment opportunities for you to save money up for a child's education. And again, that is a government ruled program. So there are a lot of rules around what you can take out and what you can put in and when. So it may be a good idea for you or it may not be. The times when I've seen that I had some concern about it is there is no provision in the way those are set up that if the market crashes and you have less money than you started with when it's time for your child to go to college, you do not get to take a tax loss on that because you are not going to have to pay if there's gains. So investing in a plan like that on a very short time horizon, if you didn't start till, say, the child was 15 or so, and you only had a few years before you were going to need to take the money out, you'd want to be much more conservative and careful in that investment so that you didn't take the risk of losing money. It's much better to do something like that when the children are younger and there's more time for the investments to grow and accumulate and take advantage of some of the tax reductions. And also having a longer time horizon means that a small setback is not going to be such a big issue when you get closer to using the money. So some of the things that we believe that clients have found very helpful are in our process, we help you develop a budget. And we look at monthly income and expenses, including all those areas that we just talked about. And we try to see if there's some way to reprioritize where your money goes that will help you meet your goals more quickly. And that we often find that there are things that can be done that are helpful to you. Sometimes it's as simple as you're having too much money withheld for taxes, and you're getting a big refund each year, but during the year, you're running up your credit cards because you didn't have enough money in your paycheck. And then when you get to the end of the year and you get your refund, it all goes back to the credit cards and it costs you interest all year long. Right. So those are some of the things we look at. That can happen too with people who have bonuses, because I've quite often had people tell me, well, we don't have quite enough money to go around during the year. So, but we know when we get our bonus that we can pay off our credit cards. So you want to be careful about getting into that situation, because you could get to a year where that bonus is not available to you. And that could really disrupt what your plan was, because you'd already been in a position where you didn't have enough cash flow, and then you were going to have to continue making payments and not have that bonus come in and take those payments out of the process. So it's kind of a double whammy. You're still not enough cash flow and you're making another payment. So those are some things that you could also be thinking about. Holidays, which we're getting, actually when this airs, we'll be just getting over the holidays, are another area where you may find yourself in some more debt than you normally are throughout the year. And be shopping for lower interest rates if you have high interest rate credit cards. There's a lot of good offers out there. And those offers are available to you if you have good credit, and it only takes you a few minutes to make an application. So you might find a zero balance transfer or something along those lines that could get rid of some of those higher rates of interest for you. Talking about the things that we've done training on, we would like to make an offer to anybody who's listening that if you find any of these topics would be helpful for your employer to offer to people who work there, or for any professional organizations that have speakers, things like that, that we could help with, we would be very happy to do some presentations and get particular topics or stay more at this general level. We feel that this education is important for people, and it's nice to be able to do it in person where you can ask us questions as we go instead of us trying to guess what your questions may be.
Right.
Yeah, so we are interested in that. And again, you can direct inquiries to us at mcradio at moneycounts.biz or visit our website. We will be posting in addition to all of the radio shows, any materials that came with the radio shows with the different speakers that we had. Their contact information is also available there. And they are all happy to talk with you. If you have specific questions, we can refer the questions to them, or you can look for their email online or on some of the services like LinkedIn. We have very strict rules about where we can present information and whether or not you're allowed to comment on it on any open forum, such as Facebook or LinkedIn or iTunes and those sorts of things. we had hoped when we first started doing the series that we would be able to broadcast in more of those places, but we're only allowed to keep the material on our website and also on the Voice America website at this point in time. So we are trying to think of a better way to be able to present this type of material to you under a different format. It may still be in the form of a radio show or webinars, where we will be in compliance with the regulations and still be able to share ideas with you. We think that's important. We wanted to cover, again, how to do business with us so that you can take advantage of one-on-one consulting instead of just listening to what we have to say, because we're talking in generalities, and the problem with those is if I don't know your situation, there's something you could take out of context and think that we should be doing it. You should be doing it this way, and maybe that might be all wrong for you.
Right.
So everybody's situation is different. Your age, if you're working or not, whether you're married and have a family, what your likes and dislikes are. For instance, for me, I love to travel. So for me, not owning a home is a better situation than having to worry about upkeep on that if I'm going to be traveling. But I've also set my work up so that I can do it from any location, so I am not stuck in one place. So there's lots of different things, if you can figure out what makes you happy, that we can talk about with you to see how can we have more of that happening in your life and less of some of the things that you just don't really like at all. And the more we can get rid of those, the less stress we have.
Yes.
And the more successful we feel, right? But a definition of fun is different for everyone. My husband thinks riding a motorcycle is fun, and I think that would be torture. So he goes and does his thing, and I do mine.
That's right.
So our process is that if you want to consult with us, first of all, we don't charge for planning meetings at all, so there's no financial obligation. And the first steps are for you to collect information in a workbook that we have for you. And it also has a list of documents that we'd like you to bring to the meetings. And what we do in the first meeting is really get to know you, and we use that workbook as a discussion document. So if you should choose to ask us to send one to you, again, you can do that through the email at mcradio@moneycounts.biz. We will send it to you, and someone from the office will call you and explain, what kinds of things you would want to consider. But that workbook is not a test. It's a discussion document, and a lot of times people get intimidated by it. But what I call it is your treasure hunt, because a lot of us make decisions over time, but we don't look at them all together at one sitting with somebody who understands how things fit together. And there's a lot of times we can find overlap or gaps, and we can close the gaps by removing the overlaps and getting things to fit together better. I like to think of it as a jigsaw puzzle. So you give us all the pieces and you tell us what you want the picture to look like, and we do our best to try to build that picture for you. And most people find that very fun, but they don't find collecting the information fun. We understand that, but it really is necessary, because if we don't delve into the different areas of all the things that you already own that are supporting your financial future, we could make a very big mistake in how something impacts your taxes or your cash flow. And we don't want that to happen. We would rather take a slower time horizon, implement things in a logical order, make sure they're working the way we expected, and then do something next. So that's pretty much how we work with you. There's generally about 4 sessions to get the beginning parts of the plan ready to be implemented. And during those sessions, the first one will be reviewing the workbook and discussing what you like, what you don't like, things that have happened to you that might have impacted your past. If you're a couple, you may have beliefs that you don't even know you have that are really contrary to each other, and it just hasn't been a good opportunity for you to discover that. So we help identify those and sometimes that can be quite funny, and sometimes it's not very funny, depending on the people that are in the room. But it's important. So we call that our discovery process, and that meeting usually takes about an hour and a half. It can be done over the phone. We do a lot of phone meetings. We do internet-based meetings. We have clients, as I mentioned, in many states, some of whom I have never seen in person. So it's not a requirement you be here. We are located in Charlotte.
Yeah, and we also have a new online system that will help in some of the budgeting questions. A lot of people, when they look at our notebook, we ask literally granularly, what do you spend monthly on electricity? And we're going through it all, like looking. So if you're not sure and you've never really put a budget together, we have software that can help you do that and quite quickly. Or we can sit and monitor it over a period of time and put together an annual budget using our new software. So if you just haven't really thought about a lot of the things that are in our workbook, we can walk you through those and help you get set up and get you started on the right track.
And I prefer to use the word spending plan to budget because it's you making choices about how you spend your money. So it's not somebody restricting you from this or that. It's, let's say, what do you want your money to do for you, and let's help it do that better.
Exactly.
And I think people appreciate that.
Yeah, we're never going to tell you how to spend your money. It's your money.
No, I'm not going to look and say, well, you shouldn't do that.
Yeah.
That's not up to us.
It's your money to spend. You work hard for it.
The second meeting is where we do an assessment, and that's where we're looking at what's coming in, what's going out. Any immediate areas of concern that you might have, things that you believe you need to plan for that are coming up, maybe remodeling in your house or a change of job or you're starting a business, all those sorts of things can come up there. So what we're looking for is your resources and then where do they need to go to make you feel the best about your situation. And from there, the next meeting, we will talk about building a plan, which is what are some of the things that we saw when we were doing the assessment that we could change to start getting things to go in a direction that makes you happier. And that's the really fun part is, okay, we get to experiment and say, well, if I change this, this might happen. We have people sometimes saying, well, gee, I love to go on vacation, but I don't know if I can afford it. We have people who want to start a second business, want to go back to school. All kinds of things come up. Children who are in sports and want to have, that's expensive for a lot of parents. Can they afford that? All those kinds of things. So that's the sort of thing we talk about. And then we build a plan that we go over with you. And as I said, we try to do it carefully and to be not rushing into things. We want things to be well thought out, try them out, make sure we're getting the results that we expected before we do something else. We try not to make a lot of changes all at the same time, and that makes it much easier to see if the changes we made are successful or not. And then we want to help you implement the plan, and this is really important. A lot of times you can go to a planner who will charge a fee for planning, and they will do a very in-depth assessment for you, and lots of times people say they got the notebook, right? And this says, well, you need more life insurance, and you should put more into savings, and you should do this, and you should do that. But they may not help you actually do those things. And if they don't help you do them and you are not a financial professional, you are probably not going to be very successful at getting them done because a lot of things can sound very similar when they're in the notebook, but then when you go to talk to somebody about them, they may have an entirely different idea than the planner had about what they think you should have, and you start getting confused, and it makes it harder for you to make those decisions. So implementation is a big item for us. And then we monitor that with you. We have a very formal schedule for reviews, and you can be on quarterly, semi-annual, or annual. It's up to you, but we want you to contact us whenever there's any big change in what we've planned for you and things that have come up. So, even if it's buying a car, whatever, where to get the money from, we want you to discuss that with us so we can help you make better decisions there. So typically we're seeing our clients several times a year, and you would get to know us pretty well, or having a phone conversation with them.
Right.
And monitoring, when we move things around, as I mentioned, we're trying to prioritize and do things in the best order, but we're not trying to do too many things at once. And the monitoring is what tells us if it's safe to go to the next item on our list.
The next change.
Right, because we're estimating when we start. Nobody is going to be able to say exactly, well, you'll be ready to make this change on this date. So we don't know how everything's going to fit together, how successful we'll be if we put together a savings plan. Maybe something came up and you couldn't save as much as you wanted. So we work with you on that to make sure you're comfortable that the next thing we're going to do, that you're ready for it, and you get to ask as many questions as you need. So we do hope that some of you will take advantage of working with us. We would love to meet you and learn more about what's important for you. And please contact us at mcradio@moneycounts.biz and make an arrangement for a personal consultation, and we will be happy to get to know you better. And this will be our last sign-off for a while, so thank you for listening. It's been really enjoyable putting this show together. Hope you've learned a lot and that we've provided some benefits for you.
Thank you.
Thank you for tuning in to Money Counts, unleashing your money's hidden potential. Opinions expressed are those of the speaker and are not endorsed by the named broker, dealer, or its affiliates. All information has been prepared solely for informational purposes and is not an offer to buy or sell, or a solicitation of an offer to buy or sell any security or instrument, or to participate in any particular trading strategy. Certain statements offered are forward-looking, including but not limited to statements that are predictions of or indicate future events, trends, plans, or objectives. Undue reliance should not be placed on such statements because by their nature, they are subject to known and unknown risks and uncertainties. The information provided is not intended as tax or legal advice. You are encouraged to seek tax or legal advice from an independent professional advisor. Money Counts Inc. is an independent firm with securities that are offered through registered representatives of Summit Brokerage Services Inc., member FINRA, SIPC. Advisory services are offered through Summit Financial Group Inc., a registered investment advisor. Summit Brokerage Services Inc. and Summit Financial Group Inc. are separate and unrelated to any other named entity. Debbie Peterson is a registered investment advisor located at 11121 Carmel Commons Boulevard, Suite 355, Charlotte, North Carolina, 28226. Phone number is 704-315-5623.